Welcome guys, glad you're here. Again, we don't have as many people in the webinar today. A lot of people has to work, so if you have any questions, I can do more one-on-one attention today. And if you have to leave, whatever, you can catch it on YouTube here in the next few days or so. Let me get this out of the way. The risk of loss trading any financial instrument, such as Forex or binary options, can be substantial. You must be aware and willing to accept those risks in order to invest. Don't trade with money you can't afford to lose. This is neither a solicitation nor an offer to buy or sell any financial interest. No representation is being made that any account is likely to achieve profits or losses similar to the ones discussed here. Past performance is not indicative of future results. Any strategies discussed are for educational purposes only and are not to be construed as specific trading advice. This material is for educational purposes only. The views discussed in this webinar are the views of me, Brian Herron, and TraderBot Marketplace, and not the views of Cantor Exchange. TraderBot Marketplace is not affiliated with Cantor Exchange. Okay, today we're going to be going over a few topics here. How do we know if the market is trending? How do we know if the market is breaking out of a range? And that's one that I'm excited about. Using technical analysis indicators, strategies with the trend, counter trend strategies, and breakout strategies. So let's hop right in. Let me get this chat box on here. Okay. Does anybody in here, have you never placed a trade? Do you know absolutely nothing about trading? If you know nothing about trading and you don't know what a trend is, let me know, because I'm going to assume that everybody knows, for the most part, what a trend is. I'm going to explain it a little bit here, though. A trend, oh, and by the way, the screen looks a little bit different today because I'm using a different recording thing that makes it much easier for me to edit so that I can put it on YouTube. So anyhow, okay, so basically, let me take a picture. We're gonna analyze what a trend is first. A trend is when price moves up, moves down. Let's say an uptrend. Moves up, moves down, moves up, moves down, moves up, moves down. However, on a trend, you will notice something. On an uptrend, you've got highs and lows. I'm going to mark the lows with this little yellow area right here. That's a current low. And I'm going to mark the highs. And I'm going to show you something. Okay, in an uptrend, you've got higher highs and higher lows. You've got a high here, and the very next high is higher, and the very next high is higher, and the very next high is higher. On the lows, you've got a low here, the next low is higher, the next low is higher, and the next low is higher. Actually, we don't know yet because that one is still in play. But this is an uptrend. However, we're looking at, what chart are we looking at here? We're looking at a daily chart. You can see that right here by clicking this little drop-down menu. We're looking at a daily chart. Now, something to realize. You may see a lot of people out there talking about trends in the market. You have to know what time frame they're looking at because a trend is relative to the chart you're looking at. We see this little uptrend here on the Euro USD. However, if you go down to a 5-minute chart, you see a downtrend. What's that? There are two different trends on two different charts. Write this down. You got your pen? Because this is important and you're going to want to remember this for the rest of your life. The higher time frames always trump the lower time frames. Now, I'm not talking about Donald Trump, but higher time frames always trump the lower time frames, which means when you're making a trading decision, depending on what time frame you are trading in, look at the higher time frames first. If nothing else, you just want to look at the higher time frames so that you know which way the market is going. For instance, let's go back to the daily chart. We know right here the market is moving up. We can see it as plain as day. Now, it's in a pullback right now. We don't know yet. We don't know if this is the high of this trend and if that's the highest it's ever going to get. We don't know that. Let me see something here. Let me see if I can do this. 1 second, guys. Okay, we don't know if this is the high, that it's the highest it's ever going to go, and that maybe it's done with that trend and now it's going to continue selling off. We don't know that. All we know is that currently, unless it breaks support, it's still in an uptrend. Now, does anybody know where the major support is on this chart? Let me take a picture and I will ask A, B, or C here. We've got several different support areas. We've got a support area right here. We're going to call this 1. We've got a support area right here of 2. And we've got a support area right here of 3. Which one is the support that we're mainly going to be focused on? Does anybody know in a daily chart? Would it be 1, 2, or 3? Before you answer, I will give you the answer. It is number 3. We're looking at the most recent support. So if we were going to be doing some type of analysis on this, we would draw a line right here at support and extend it on out into the future. Uh-oh, hang on. There we go. So right here is the support. Right here you can see the support, and I'm going to go in here to the chart and I'm going to draw a line on the chart now. Horizontal line. We've got the support right there. And also I'm going to draw a line on my most recent resistance, which is up above where price is. So we've got support and we've got resistance right there. Here is our support area. Here is our resistance area. Is this a consolidation? No, it's not. It's only been in this area for a short time. This is an uptrend right here. Price is sitting darn near support right here. Now there's two ways that this can go. It can bounce off support and go up and continue the uptrend, or it can break this support and go down, and that would mean that this uptrend is over. Now when price breaks an uptrend, it does it in a fashion. It's not predictable, but it's a little bit, predictable. When a price, let's say it breaks this downtrend, it's going to go down, then it's going to come back up and test the support area, and then it's going to fall. Same thing if price breaks up here, it's going to go up, come back down and test the resistance before it continues on higher. That's the way that the markets usually work. You can't really predict exactly where it's going to touch using that method, but it's pretty close. You're within 10 pips or so when it usually does that. So let's see if we can look where price has moved up, pulled back, and moved up again. One place that I see it right here is right here. Let me blow this up a little bit. Now price was in an uptrend. Price was in an uptrend. It made a resistance level right here. When it broke through, right here, when it broke through, it went up. It came back down to the support before moving on. Do you understand how that works? Now, it does the same thing. And again, let me move this up here. Okay, really, you can't really see it very much. There's one bar right here. It moved up and then it came back down, but that's really not good enough for me. I'm looking at other areas. Okay, look at this level right here. Price moved up, then it pulled back, and it's trying to break out of that resistance level there. So it moves back and then it breaks through, comes all the way back down to support right back here before moving up. Even though it didn't move up and didn't have any follow through, didn't continue, it did move back down to support and then move up to resistance almost to the tick right here. If you can see this, I'm going to try to find this on a smaller time frame right here. This is called a double top right here, and it usually marks a reversal, but we're going to go take a look at it. We'll go down to an hourly chart. Let me see if I can find out where it is. Give me just a second. Okay, it's going to take too much time to find that on an hourly chart right now. I'd have to go in there and look at the dates and everything. But anyhow, this is called a double top. Now, what a double top indicates, and I will take another picture. A double top, some people call it an M formation. It looks like this. Price moves up, it moves down, then it moves right back up to where it was, and then it moves down and continues to fall. Now, the way that you can tell when price may continue to fall or may end that trend is if it breaks support. Let's draw a picture of support right here. If price moved up, and then it moved up again and had no follow through and came back down to support, then price will fall in quite a few circumstances. And the way to know a little bit more if it has more probability of falling even further is if it comes back up to this support area and bounces off of it. Now, if this pattern happens, it forms an M formation or a double top, breaks support, comes back up to touch that support, and then falls, that's when I know that the uptrend is probably done. It's probably finished. So let's analyze the chart that we're looking at right now. We're looking at the Euro USD. Hang on. There we go. And let me blow it up just a little bit more for you. Okay, so we've got our double top. We've got it right here, you can see. You can see the touch here and the touch here. Now, where would our support be? Support would be right around here. And right around here. The reason that I'm marking this second line is because I'm wrong on the first one. I'm actually wrong on the second one too. Give me a second, we'll pull this down. There we go. There's that support. And you have to go back in the past. You can't take support on, the last candle. There's not enough information there to be basing anything off of. So you have to go back into the past. So we've got a double top here, 1, 2. We've got a support area right here. Now, did it break that support, come back up and touch that support, and then fall again? Absolutely it did. Look right here. I will mark it for you. It went up here, came back down, went up, came back down here, kept falling, came back up, touched support, and started to fall off. Does everybody follow me so far? If you do, please type yes in the little chat box. If you don't, let me know that as well before moving on. Okay, good. So we're in an uptrend here. Now, there are two ways to trade a trend. You've got trend following, which means you're going to trade in the direction of that trend. And you've got trend fading, which means you're going to trade in the opposite direction of that trend. Right here, we're looking at a trend fade trade because it's fallen, came back up, touched the line, and has continued to fall off. Now, by looking at this chart, I would know that I have a level here, which is a support level right here that I want to be looking at. Price most likely is going to fall to this line. I can't tell you the exact percentage, but based upon years of experience, I know that price is most likely going to fall to this level. And this is the level that I am looking at. It's 116.61, which is about 40 pips below where it's at right now. If price gets down to this level, let me go down to an hourly chart here. Hourly chart. If price gets down to this level, that's where I am going to be looking to take a trade. Now, whether I want to go long there or short there, that's I'm not even making that decision right now. However, based upon what I have seen, I may be taking this for a short all the way down to this line, over the next few hours or so. But I know it's in an uptrend. I know that if I go long, let's say I'm in the Forex market, I have a very good probability of making some money. However, since binaries have that time factor, that expiry, going long or going short is a little bit different than going long or short in Forex because you have to be right upon expiry. So what we're going to do now is we're going to go ahead and look on the hourly time frame. What do we see on the hourly time frame? And while we're doing this, I want to tell you, don't ever trade from your gut. Don't ever trade what you think. Only trade what you see. Right now, on the hourly time frame, even though it's in an uptrend on the daily, I can see on an hourly time frame it is in a downtrend. Now, let me ask you this question. Let's say I had a house for sale. Price has been going up from 100,000 to 110 to 120 to 130,000. Okay, we know price is moving up. In between each one of those jumps, though, let's say it takes 6 months for each one. Now, we know that that house is going to go up in value, or has been going up in value. We never know where the top is. But we know that the house has been going up in value. However, during these 6-month periods, price will fall from 110,000 back to 105,000, or from 120 back to 115. It's the fluctuation of the market moving up and down, up and down. Now, if I want to take a trade along or buy that house, I know that in a few years I probably will make some money on it. However, what if I don't want to wait a few years? I can still take those small retraces in the midst of that trend, as long as I have some, either a stop loss or maybe I'll get in with a binary. I'm not afraid with taking a counter trend with a binary because my risk is limited. So don't ever be afraid in taking a counter trend trade with a binary, as long as you know what's going on, the overall trend. So since this is a downtrend on an hourly, even though it was an uptrend on the daily, I know where my support levels are. Now, if I'm looking at this, if I were only looking at the hourly chart, if I were one of those traders and I was like, I don't care what the daily's doing, whatever, I'm just going to look at this chart, I wouldn't know. I wouldn't know that this was a support level. I'd have to scroll back in here for a long way, and I would have one little support level there, and I would tell myself, well, is it really important? So you need to scroll. Excuse me. You need to go in and look at your higher time frames as well. Now, how far out am I going to take a trade if I decide to go short here? Well, I want to gauge the trend. Upon looking at this trend, I can see that the trend is moving down about that fast. Now, how technical is that? It's not dive bombing. It's not doing this, and it's not in a consolidation zone. It's not doing this. It's just falling right now. Now, since it is falling, if I'm going to go short, I need to know where my out is. So where is my out? I'm going to go in here and look at the support and resistance. There's a resistance area right there. There is one right there. And the most recent one is right about there. Now, unless price jumps up and starts moving up above this area right here, for me, in the short term, I'm in a downtrend. So, on my overall long-term outlook, the Euro USD is in an uptrend. On the short term, on an hourly chart, it is in a downtrend. A trend is relative to the chart you are looking at. Now, let's take it even further. Let's go on down. Go down to the 5-minute time frame. Oh, let me open up my chart some more here. Now, a lot of people have expressed interest in trading the 5-minute binaries. There we go. So, on a 5-minute time frame, are we in an uptrend or are we in a downtrend? Somebody tell me. I don't know. We are in a downtrend. We're in a downtrend again on the 5-minute binaries, correct? 5-minute binaries. Now, we also have support and resistance on the 5-minute binaries. Our support's going to be, our resistance is going to be right there, and our support is going to be right there. Now, since I am expecting price to fall about 40 more pips, or all the way down to this level, what am I looking to do right now? Well, I'm more of a trend follower than a trend fader, so I'm going to tell you exactly how I'm looking at this trade. If price gets back down to this level right here, I'm looking to sell it, but only if it gets down there. I'm not looking to sell it here. I'm not looking to sell it here. I'll talk about that in a second. The reason I don't want to sell it here is because nothing's happening. It's in the middle. People are buying, they're selling, market's moving up and down, but there's really, there's no follow through. I want it when price, busts through. Let's take a look at Bitcoin. A buddy of mine was, and I was talking about Bitcoin the other night. A few months ago, it was like at 1,000. Now it's like at 4,000. Well, if you go look at that chart, you can see exactly when everybody started buying. On this chart, you can see, the main places where people are selling. You see this support area right here. Now, when price came down to here, this area right here. Now, when price got down there again, which is here, it took about 5, 10, 15 minutes, but price did fall through there. However, actually it didn't. It took 5 minutes because this bar didn't touch, but this one did. So it wasn't on the actual touch, it was on the next touch. And look what happened. Price broke through and it fell down. Even on the short-term time frames, look what happened. Price fell, and like magic, it came back up and touched the resistance now and fell right back off. So that 1, 2, 3 method of breaking through resistance, coming back and touching it, and then taking off again works on, we're looking at a 5-minute time frame here. It works on dailies all the way down to 5-minute time frames. Your homework right now, and after we get off this webinar, sometime this weekend, whatever, I want you to go in and I want you to look and see where you can find when the trends break out and when they don't, when they fade. Now, we've been talking about breakouts. Let's talk about trend fades now. Technically, this is a trend fade because on the longer term, on the daily, but on the short term, it's a breakout trade. So let's look at trend fades. Hang on just a second. My throat is dry. I need to get a drink. Okay. Let's go back to the daily. We're going to look at the daily, and we're going to look at a trend fade here. I got bars all over my chart. Let me get rid of all that. You should see my screen sometimes. Sometimes I just have to go in there and delete all kinds of stuff. Okay, so let's pretend right now, and I see this happen. It's happened to me. I can't tell you how many times. And this is what I don't want you to do. If you pay attention to this advice right here, you're going to save yourself a whole lot of money. Okay, now, there we go. Let's say this is all you see right here. And you think to yourself, it's in an uptrend, but man, it's moved so far, it can't move any farther. And you decided to get in short. Well, you may make a little bit on the short term right here. See how the price is falling down. But more often than not, if you use the same rules that I just talked about buying on a breakout or selling on a breakout down, what's going to happen more often than not is when price gets back up here to this level, it's going to bust through. And that one did. It got up to this level, and if you sold right here because you quote-unquote thought that it was going to form a double top and sell off again, well, you're wrong. Double tops are formed, if I'm not mistaken, like something like 25% versus 75% for trend continuation on, on that one bar. Now, and when I'm talking about on that one bar, I'm talking about on this one daily bar here. It broke through. 25% of the time it will come up and touch and then fall off. Anyhow, so there's that breakout. Well, let's say a couple of days later you got in and you thought, well, I don't know, prices went up here. It can't go any farther, so you decide to sell it again. Well, on this one, you probably made money. Let's see. Yeah, you made money on that one. It fell back. However, if you sold it on that next, the next resistance touch, it broke through again. So that's two. That's one right here, and that's one right here. And this is why I don't like to trend fade when the market's really trending. So we're going to try to find a third touch here. Let's see. Well, we got to have a little bit of okay, there it is. Let me and I don't know if this is our double top. There it is right there. Let's see what happens when the market gets right back up here. Okay, now you couldn't have got in on this trade. This is a gap trade. This is probably a weekend trade, I'm assuming, because price, it closed right here, but then it opened way up here. Now, in the Forex market, you're going to see that as one big long candle. However, in the futures or binary options market, you're just not going to see anything, because if that was a weekend gap trade on 8/28, let me check the date real quick. Yeah, that's a weekend gap trade. You can't even get in on that. So that's one you couldn't get in on. So technically, we've got two losers and a no trade here. And then if we continue to do that, I'll do one more. Here's our top. Hang on. Here's our top. If price gets up there, let's see what happens. Price didn't make it. It made it almost. Okay, now there's our double top. There's our double top. Price didn't make it quite to the resistance area. So there's two no trades and two losers. Now, what do you call it? The not trend following, but if you want to fade a trend, here's the way that I fade a trend. Let me scroll out. Where are we at here? You've got to do a 1-2 method, not just a breakout. A breakout is when price gets back up to resistance and punches through. But a 1-2 method is you have to know your support and your resistance. What we can see right now is here is our support and here is our resistance. If price got up here, I need to pull this over here in just a minute. But if price got up here and we marked a resistance and then it pulled back, we still have to wait for price to move back up before we can, get in short. So we're waiting on a break to the downside or a break of this support line right here. That's what we're waiting on now. We've got our support. It's actually better to use more bars. So we've got our support here. Well, that one didn't do it. So what we're going to do is we're going to try it on the next one. Okay, right here we can see price got up here. It pulled back, so we're going to move our support. Right there. Now, if price breaks this support level, that's when I want to go short. So let's see what happens. Nah, it didn't do it again. So we're going to try it again. Wait for price to make a resistance area. I'm going to do this. Ah, goodness. Okay, there is our support. Now I want to go short if price gets back down here to this support line. Now I know this trade is going to lose, but let's just look at it. Okay, now price got down here, as you can see. It got down here to the support level. It touched and bounced off. That is a losing trade. However, if I'm trend fading, that's the trade that I'm going to take. And that's exactly what you do. Let me get rid of this line. In my personal trading, trend following has proven to be more profitable than trend fading. I do trend fade. I'm going to show you what I use here in just a second. But that's the way that I trend follow, and that's the way that I trend fade. Now that's using support and resistance. Another thing that you can plop on your chart, and I haven't brought this one up yet. I'm going to put a moving average on here. Where are we at here? Moving average. I'm going to put a moving average on there. I'm going to stick another one on there. One of them is going to be one time frame. It doesn't matter. And the other one is going to be about twice that much. Right now I'm using 9 and I'm using 18. Let me make them a different color. And I'll make them thick so you can see them. here's a way to gauge a trend. Okay, you've got something, this is called a moving average crossover. Now, you don't want to take every single crossover. The basic theory is this. When the short-term moving average, when the long-term moving average crosses the short-term moving average, you want to go in the direction of that trade. Like here, it's across to the downside. Here, it's across to the upside. Here, it's across to the downside. And you can go back through here and you can look at all these, but that's not the only way that you can gauge a trend, and you don't want to take a trade on that. What you want to do is you want to look when the market is trending and it shows a trend. We want the moving averages to be in the same direction, both moving the same direction, and to both be relatively smooth. Okay, right here, it's not relatively smooth. It's a beginning of a trend, and you can see that it just crossed, a few bars ago. It's starting to move in an upward direction, but it's not really got any momentum yet. You're looking for momentum. So as price gets up here and does all this, this right here is momentum. Price has moved up. The moving averages have they almost crossed, but they did not, and price took off again. Now, when I see one moving average, or the longer term moving average, moving up in a straight line, and I see the shorter term moving average staying on top of that, not crisscrossing in and out of it, but staying on top of it, I know that that trend is something that I want to look at. So if I'm looking at this right here, this tells me I do not want to be short yet. Do not want to be short. And as the price goes along and continues to go, again, again, this looks like a pretty good trend, and you see it's really, really high, but don't be scared to buy it up there because it's high for a reason. Traders are trading it that high for a reason. But I'm looking at the moving averages. I'm looking, how are they angled? What do they look like? Are they crisscrossing back and forth in between each other? And you can see a crisscross. Let me go back down to the 5-minute time frame and see if I can see a crisscross here, so I can show you what that looks like. Okay, you see this here? You see how the shorter moving average and the longer moving average are crisscrossing back and forth in between one another? That's no good. The only time that I would take a trade on this is way back in here when the trend has started. Let's go take a look. Okay, right there, it looks, the trend started here based upon the moving average. It's moving down. The moving averages are moving in the same direction. This looks like a pretty good trend. Now, on down in here, they start crisscrossing, whatever. I don't want to trade it right now, especially not at 3:30 in the afternoon. But put that in your tool arsenal. Look at moving averages. All you have to do is place one over the other, and it doesn't matter. People talk about, well, you have to use the golden cross, or you've got to use a 50 and a 100 moving average. Nah, none of that matters. All you need is one, and then you need another one that is double the amount of the first one. And just so that you understand, what I'm talking about, is if one moving average, let's say it's at 20, and what this means, it's looking back over the past 20 bars. If one is at 20, then I know the other one should be right around 40. Now, when we change them, it changes the way the trend looks. It changes the what do you call it? Remember when I said the trend is relative to the chart you're looking at? Same thing with moving averages. It's relative to the time frame you're looking at. If we're looking at a 20-period time frame and a 40-period time frame, then our expiry is going to be longer. It's going to be longer. It's not going to be a 5-minute expiry. It may be an hour expiry, something like that. So there are some ways to gauge a trend. The last thing that I want to touch on today is, how do we know when the market is getting ready to break out of consolidation and begin trending again? All we have to do is go draw some support and resistance lines. That's it. Let me pull that out. right now, the daily chart is in an uptrend. The hourly is in a downtrend. We've got some consolidation going on. I'm going to draw some support and resistance lines. There's one. Right here, it's in a consolidation. It's down near the bottom of the consolidation right now. But right now you can look, price is neither moving up nor moving down on this time frame. So it is in a consolidation. Now, how can we gauge if price is going to break out? All you got to do is draw 6 arrows. There's your first 3. And there's your other 3. Now, if price breaks down below this support area and continues to fall and comes back up and touches it and falls again, when it drops below this support area right here, that's when I'm looking to get in. If it comes up and breaks above there, pulls back and continues up, when it breaks this resistance area, that's when I'm looking to get in. Does everybody understand? If you do, let me know. If you don't and you need me to explain some more, let me know that. Now, the bad thing about this is, how do I put this nicely? I work a lot with probabilities. Using support or resistance, yeah, I'll talk about that in a second, Rich. Hang on. Okay, and I'll talk to you in just a second, John. The bad thing about using support or resistance is because the way to calculate the probabilities of that happening, it takes a lot of time. The way to do that is to get in there and clear your mind of what any chart looks like. Maybe you turn your charts off for a week or whatever, and you go in there and you start looking. And where you can't see the historical or the future or anything, you just see the chart that's on your screen. Like if I'm looking in here and I want to look and see what's happened historically and I want to test my theories, what I'm going to do, I'm going to open up a chart just like this. Now, what I'm going to do is I'm not going to want to know what comes to the right side of this screen because it will give me a bias. I don't want a bias. I don't want a bias whatsoever. And then I will move forward. I will draw support and resistance lines, and I will look and see exactly what happened. Okay, now let me talk to John or to Rich. Rich asked, yes, but isn't that late? Of course it's late. However, to me, I would rather be late and get in on a good trade than trying to push a trade through and lose. Whenever I try to guess the market, it ends badly. So I try not to guess anymore. Now, I have losing trades all the time, just like every other trader on the planet. But the thing is, I'm trying to get at least, if I'm trading in at the money or, binary for 50 or, between 40 and 60, I want to win more often than I lose. Or if I'm trying to get in on an in the money trade, what I'm trying to do is I'm trying to maintain my equity curve, whether I trade 100 times a day or 1 time a week. I'm looking for that one good trade. So of course it's late, but the probabilities are going to be much, much more higher if you wait on that type of confirmation. Now there's such a thing. There's a term, and what I don't want you to do is there's such a thing. It's called analysis paralysis, and what this is, it means when you analyze the market so much, you've got moving averages up there, you've got support and resistance, you've got RSI, MACD, stochastics, and all of this. Whenever you got all that on your screen, it confuses you because one indicator tells you something different than the other indicator. It's analysis paralysis, and you can't do anything. I use one at the most 2 indicators on every single trade that I do. That's it. I don't put anything else on there. Rich asked, are you placing this trade on Forex or binaries? I'm placing it with a binary. You know, if it gets down to my support area, which was down here somewhere 40 pips away, that's what I'm going to do with it. I'm looking to get in with a binary that is in the money, and that's the way that I'm going to trade it. I'm going to most likely let it expire. I'm not trading that trade with Forex. The only thing I do with Forex is trend following. I never try to gauge the market. I never try to fade the market in Forex. Okay, I said that was the last topic. Sorry, one more real quick topic. Trading on a pullback. Now, if price is in an uptrend on the daily, which we know that it is, let me go up to an hourly chart here. I don't know what happened to my chart. How in the world did I put my chart down there? I have no idea what I just did, guys. Hang on. There we go. Okay. Try this one more time. Okay, Lubo, you still in here? No. I don't know what I did to my chart anyhow. I'm trying to fix it now. Trading on a pullback. Okay, it's in an uptrend on the daily. We're looking at a downtrend on the hourly. Now, a pullback is when it's moving down. When it moves down, then it pulls back. Moves down, then it pulls back. Now, you can gauge getting in on these trends with simple support and resistance. That's it. I'm going to draw lines on my support areas right here. Where are we at? I don't know what I did here. Okay. There we go. There's a support area. Let me open that up. Now, I'm looking for price to break through that and pull back up to the support area. Right there. Did you see that area? It pulled back up to support, and then on the very next bar, boom, it fell off. Even though it did go higher, it still fell off. I want to do that again on every single support. I'm waiting for price to break through it, pull back up to it, and let's see, price broke down, pulled back up to it, and you can't see it, but on the very next bar, it fell again. Let me see if I can show that to you. Okay, we mark this as our support. Price broke down through there, not by a tick or a pip, but I mean, you know, by something good, 5 pips, 10 pips, whatever. Price broke down through here, pulled back up to the support area, and on that very next bar, it fell off. It's on a 1 minute time frame. Let's look at a 5 minute time frame too. All right, let's draw a price at support here. Now, you can see exactly on this one as well. You see support right here. Price went down below the support. It pulled back up to the support, which is now resistance. And on that very next bar, it closed below it. No, I got it, AJ. No, I had an issue with my chart. Sorry about that. Okay, and then on the very next bar, it closed below there. Even though it stayed below there just, you know, for that 5 minute period, that's fine. That's all that matters in a binary. It's a limited time. So I've covered quite a bit today. We went on for longer than I thought. The webinar is over, but if you have questions, let me know and I will answer them. Thank you. Bye-bye. Okay, guys, webinar's over. That's my recording. if you want to ask questions or talk about whatever now, we can. There was one guy that says he did not understand the concept. John, you do not understand the concept. Do you know what, John, do you know what support and resistance is? Do you know what that is? Okay. Do you understand, like, if I'm looking at a chart, let me just draw her. Let's see. If I'm looking at a chart and it does, you know, let's say price is moving on and price looks like this, and I draw a resistance area, and then price breaks up above there, then pulls back down to it, and then takes off again. Do you understand that part? What part do you not understand? Okay, gauging direction. You don't understand how to gauge the direction. Is that correct? Okay. Okay. Let's go to an hourly. What time frame are you trading on? If you're not analyzing your chart from at least where did my stuff go? If you're not analyzing your chart from at least an hour or above, you're doing yourself an injustice. There we go. You've got to look at the larger time frames. 5 minutes is great and all. It's great to place trades, but you need to know when price. Okay, 1 hour or 4 hours. Okay. Try this. The next time that you're looking at a chart, and here's another little trick. This is not going to be on the recorded video, I don't believe. Let's say the Euro USD is moving up. Something you also want to look for is look for other corresponding pairs. Is the British Pound USD moving up? Is the Euro Yen moving up? Now, if you look and see which, let's say the British Pound USD is not moving up, but the Euro USD is moving up. If both the Euro USD and the Euro Yen is moving up, then you want to go check a third chart. Let's say Euro Pound, whatever. If that one's also moving up, then that means that the Euro is the controlling factor in the market. The Euro is the one driving this move. It's not the USD, it's not the Yen, it's not the Pound, it's the Euro. However, like let's say that the Euro USD was moving up. Go take a look at go take a look at other charts. Let's say the USD Yen was moving down, and let's also say that the let me think for a second. Let's say that the USD CAD was also moving down. Do you know what the driving force in the market is? It would be the USD. The USD would be the driving force in the market, whether it be a news release, something like that. That's another way you can gauge your market direction. Now, let's just pretend that the Euro is the driving force here for a second. If the Euro is the driving force of this trade, and let's say the Euro USD, Euro Yen, Euro Pound, all the Euro pairs are trending up. If you buy that at resistance, you have a far better probability of price going up, because all of the Euro pairs, the entire Euro across the board is moving up. However, if it's mixed, if the Euro USD is moving up, but the Euro Yen is moving down, but I don't know, Euro Australian is moving up, and whatever, the Euro whatever else is moving down, then it's mixed. When price is mixed, it's not trending. Something has to be strong for price to trend, but if it's mixed, it's going to sit here and do this because there's no momentum. So the next time that you go and you look at your charts, check the other euro pairs or the other pairs on whatever else you're trading. At the very least, go check your daily chart. Find out, and I lost my chart, what to do with it. Go check what price has been doing lately. See, is it in a trend? You don't even have to check all the pairs. Check about 3 or 4 of them. And if they're all moving in the same direction, well, that chart's moving up. All I ask is go in there, take notes, look, go back, do some back testing, go back into the historical charts, look and see what's happened. And that's that. Get rid of this. Other questions? I will answer them to the best of my ability. I don't know everything, so please forgive me. Oh, you're welcome. Just, you know, if you're part of our Facebook group, just send a message on there on something you want to know, and we will answer it as much as we can. And that's about all I got today. I will say that the liquidity at Cantor Exchange continues to improve. I'm very happy about that. The charting experience with Cantor Exchange also continues to improve, and I'm extremely happy about that. And every time that I've had an issue and called AJ about it and said, hey, he's straight up, and he either tells me, well, we'll get right on that, or it's not something we want to worry about right now. So, you know, they're straight up, and they let us know what's going on, and I'm pumped. So that's the webinar. Let's see. Yes, they have. They've done a whole 180 since this time last year. Oh, and if you want to get real technical about it, AJ, I'm gonna harp on you for a minute. This is before AJ got there. They used to have this platform called Spot Option. Horrible. It was horrible. I'm so happy they changed to TraderLogic. When they made the switch to TraderLogic, it was like, boom, everything's better. So, I'm happy about that. So, all right, guys, that is all.